Hey everybody, welcome back. Well, from the looks of it, you can see that we are now hitting higher highs religiously. You can see the doji as we're setting up right here. We can just see this base and how we're in this base, and we know what's going on with the bond market, the dollar. We're going to get into that. We're going to get into what sectors to watch. We're certainly going to get into who came out with earnings tonight and what you need to watch for tomorrow. We have a lot to cover in a short time to do it. So let's get into it. Start with the doji and go, okay, we finally are above the 23 levels, pretty clear. Like there's no way that we can look at this and say anymore that we are not above and that we did not make a higher high, and we can just drop that and leave it right there. And you can see that pretty clear. And if we just see these marks right along here, I don't really care what you call this, but you can call that a DTL for sure. Now, whether or not this is a perfect channel or not, doesn't really matter. Broke out of the channel. You can see your inflection bar right there, a 3-bar pattern, breaks out, flag, and then here we are. All right, so that's what we've done. Now, the question is, what do we need to be watching next? Well, now you're going to start getting into multi-year levels. You're going to have to start going back to 22, start looking at all-time highs. Now, we're not there yet, right? But you can start seeing where some of these levels are going to possibly take you to and where you're going to be focused on. I think you're heading here sooner than later because of the rotation that's going on, and we're going to talk about that rotation again. We got into it pretty deep yesterday, and we're going to follow through on that, but you can see these levels. You can see where we were. You all know what happened here, and that's a really important distinction that we should talk about. The events that are happening here are macro events. They're the same kind of macro events that happened here when CPI inflation peaked, when they came out and said we're going to have liquidity here and they're going to start selling bonds here and they're going to have to do something about inflation here. This is what happened. These are macro events, as we're aware of. You know, the market moves from 3 very distinct possibilities. You move from macro, fundamental, and technical. And as always, we have the stool. Sometimes you're leaning on the macro, sometimes the fundamental, sometimes the technical. But macro rules the world. It always does. And so there's nothing technical about that sell-off that someone's going to say they knew or hear. And people that are looking at a chart here and trying to figure out why REITs, regionals, and biotech are going up and looking at a chart and saying that's why, frankly, they're clueless. Why this is happening is because of macro events. And we've been discussing this now since early November, frankly, since November 1st when Powell's last meeting. Drill into this on the hourly and you can just see what's happening. And I want to point that out because you need to understand why this is happening. If you understand why it's happening, then you can make more informed decisions. And, you know, it's funny, I was just talking to one gentleman about this. He's like, oh, it's like, you know, like you have the scoop, like this is like inside information. No, this is understanding how the market works. This is understanding macro analysis, understanding the correlation of the dollar to the bond, to the sectors. That's all this is. This is really very simple stuff when you get it down. But you start looking at this kind of base, how you're breaking out. Could you come back and retest? Maybe. You start going through this. What else do you see that's out there that's of interest? You have a 4-hour right here. So watch when we drop the 4-hour, right? And you can see the peak right there. Okay. So this might be a level for you to watch tomorrow, 47.34, and make sure that we hold 47.34. We're certainly going to want to make sure that we hold that level. That's for sure. I mean, I'm certainly going to want to make sure that we hold that level. So we'll go from there and we'll watch that and we'll see how it plays out. But it's definitely an area of interest for me. That's for sure. So consider that one area to look at. Okay. Let's go into the Nasdaq. And what we'll do is we'll do a 4-hour on the Nasdaq, and you're going to see something very similar around the same exact time. And then we remember this July 28th, and then remember how we sold down, came down, and remember what happened on July 28th in here. We remember that that's when Japan came out with the dollar and changed what they were going to do with the dollar. We can see in November what happened in here. This is when Powell started to shift, and this is his real big dovish shift. To say it was dovish was, you know, an understatement. So you can see there, right there, 14.7. 16.47 is where you want to watch tomorrow. That's the level you want to be. It's a long day and a long day of trading. But I want to go through that and spend more time on that. You should be dealing, obviously, with what's going on here. RTY. One of the things I do want to point out to everybody, just understand where you are. Okay, you're still trendless. I know we're rocking and rolling here, but you are still trendless. You still have not broken out of this base, and you're going to want to watch that very clearly and make sure that you finally clear this resistance. Now, you haven't had a tenure the way that you had this whole time. So it's there, and we want to make sure that we get out of it, but make sure that you actually clear it. When you look at what's happening here in regards to yield, it's completely imploded. Now, we're going to just look at a 4-hour here because I think it makes it a lot cleaner to see what's transpired here. But just, again, when you get into this, you can just see this level really very clearly. I think you can. And let me just go back to 22 and just pull that down, and you can see your trend line there. And people say, well, don't chart yield. I mean, I chart everything, guys. I just do. But you can see right here, and right in there. And to me, it's glaring. You broke it. You absolutely broke it from up here. And now you've broken that trend line. And what would happen is these trend lines, like support and resistance, they can become areas of contention. So we'd want to watch that, and we'd want to see how that plays out. That's for sure. I certainly know that that's something that I'm going to want to pay out and make sure that we stay above that. And we don't really want to get back over that 4046. You don't want to get back over 4%. You want to stay here. And we know the sectors that we're going to move. We talked about them yesterday. Here you are in the daily, and you can see that much clearer than before. Now, one thing that I did note today, and I think that we should note, is that the VIX in and of itself actually ticked up. And you are going into an option expiration tomorrow. That is pretty much the last OpEx of the year, right? And that people are kind of saying, oh, 3 billion, it's going to be a big number, watch out. I mean, they hedged because you had a meeting with the Fed. It is what it is. They're going to unwind the hedge. They're not going to probably reapply the same hedge going into Monday. It is what it is. Some stocks will go up, some stocks will go down. I don't think it's a reason for us to to panic or to look at anything and think of anything else, but that it is what it is, and that's exactly how I would look at it. I wouldn't put anything more into that until you actually see it do something. But you did see some weakness today, and we should discuss that. This was something that I played around and actually shorted today and did okay with. I'm not really crazy about this position and how it's acting in here. You're unable to rally and follow through. You're unable to consolidate. If we put in the simplest of indicators, and you really don't want to see this happening with Microsoft, where you're having the 12-22 cross in here. And as everybody knows, I use a 12, I use a 22, and a 55. Let's clean that off and keep drilling. So you can see right in here, that's my concern, how we got to it and rejected. And it's an issue. It's definitely an issue. Once you break here on the 70 and you start rolling, you want to pay attention to that. And that's not something that I certainly want to see. So we actually shorted this today and did fairly well with that trade. But overall, we had a lot of trades that, to me, it just looked like it was time to start ringing the register. I'm going to show you a couple of them, because I think it's important. You want to be real careful about adding up here until you get some real confirmation. You have to think about it from this standpoint. Like, where's your edge now? Everybody knows that they're going to cut rates faster than anticipated. All of retail knew it today, and they piled in. And when they piled in, what happened? We got dojis. Apple pops over, but forms a doji. So it hits all-time high close, but it's a doji. So it's not overly exciting what's happened there. And I think that that's definitely something that I'm watching again. I watched this with Google today, and we watched how, let's clean off all my nonsense. We watched how Google was unable to get back above the 55. Again, if I take out the 22, I take out the 12, and we just look at the 55, I keep bonking over and over again. That's 4 times under. That doesn't inspire confidence. Now, we are rotating as we talked about it. So is money coming out of the Magnificent Seven, and is it going into other sectors? I do think that. But I do think that some of these names you have to look at and start wondering, where is that kind of pullback that we're going to see? So this is something that we actually bought around 64 and blew out some yesterday, and then in today blew out again. You get to a point with these guys where you don't want to be, especially the 3X ones, you don't want to be on the wrong side of these. You don't want to be on the wrong side of them. I can't say it enough. We're up $40 in something in less than 2 weeks. I don't need to be a hero here. I don't need the triple, right? I can always get back in and find another way in. But what you want to do is you don't want to come in tomorrow and be, gap down for some reason and then wonder, okay, what do I do now? So this was an enormous move, and it just made sense. Also, when you start looking for me, and the way that I look at things, when I start getting to like a 90 RSI on a daily chart, I mean, there's only so much room, guys, if you start looking at it from that perspective. There's really only so much room. And what you don't want to do, and I'll show you a great example of this, you buy in here, and then one day you come in and you're up here, and then the next minute you're coming down and you're down about $50 or 20% drop. I don't want to be that guy. It's not how I trade. I don't need the last dollar. I see this huge gap that could fill too, but you know what? I'm allowed to buy stocks back. So there's nothing wrong with locking stuff in and then just coming back to it. So I think that that's something that people lose a lot. So this was something that made a lot of sense. I do have one trade that I do want to walk through that I think you guys will find interesting. But also, LABU is another one that we did. And this made a lot of sense for us. And this was not something, to be candid, that we closed completely. But, we're up $30 and it's been a week. And so you start looking at where you're in and look and go, okay, well, it's been 1 week, we're up $30. And again, I look at this, not because I need to get out right away, but because I'm like, well, you're at an 80. And then you start going through it. Okay, well, here's where we were at an 86. And then back here in 2019, so you start realizing how big of an anomaly what just happened is. And then what you want to do is just kind of go through it and go, well, what happened during those periods of time? And then did it go well? And the answer is not really. No, they kind of started putting in tops, right? I don't want to come in one day and deal with that. So the only way to do that is to mitigate risk. So I didn't close all of it, but it made sense for me to start looking at that. Another one that I thought made sense to close was just GDDY. We bought this on a break. I'm going through this specifically because I got this from the pre-market public. It was somebody else's idea, and then we made it our own. That's why I love doing the pre-market lives, because everybody throws out their own ideas, and then we figure out how we're going to utilize them and just profit from them. So we do it Monday through Friday. I would definitely tune in. I think it's arguably worth everybody's time, even if you watch it later. Just the ideas and the idea generation that's been in there. You've had guys like throw out this kind of name, the uranium trades, just stuff that I'm not even looking at. But I've got a reversal bar here, and then I start drilling into this just a little bit and going, okay, well, do I really want to be in something? And this is a 3, a 5, and an 8, and this is on a 15-minute chart, so I can zoom in a little bit. So I'm watching the 5, rejection. All right, tries, starts rejecting the 8. Now I'm trapped between the 3 and the 8. Do I really want to be in this? Like, I have so many open positions. Do I really need to be in this that's reversing and waiting to see what that next day's like? And the answer is no. I have too many open positions as it is. I raised a tremendous amount of stops now. And the question is this really where I need to be adding? I think that answer is twofold. I think there's names that still look absolutely, they look spectacular, but there's other names that, I think that they've kind of come home and played out. So this was something that we've been talking about this for weeks, but this is something that had a volume shelf right here, and we paid like $28 for this on a day trade that we held over, and then it just kept working, so we stayed with it. And I'm running right into this breakout bar, and I'm unable to get in here. Now I have a doji. I see the volume shelf, I see where I'm at, but when you're in the high 20s and now you're coming into and you're hitting resistance, I don't need that last dollar, even though people are going to look at this and go, oh, why don't you just wait and see how that doji settles out? That's great until I come in at 41 3/4 tomorrow and then have to make a decision. And if you think that can't happen, stocks go down as well as they go up. So to me, this made sense to look at, especially the way that tech was acting. It just made sense. I understand the rotation. And certain rotations make a ton of sense. You can see this with Nail today and how this performed. This was something I was trying to get in, and I just didn't like how fast this went. It moved way too fast for me to really get involved. Like, do you really want to buy that 1 minute bar and then see how this is going to play out? Tried a couple times. The better trade to me was just watching how this was playing out in regards to like Toll Brothers and these other names. It's down because of LEN. So, and this is what I'm talking about. You just don't know what you're going to get. And this was my point. Like, do you really want to go home long Nail, and then you have LEN that's down about $8 after hours, or $6 right now after hours? And the answer is no. You just don't want to be, you don't want to be that person. So I can't stress that enough. You don't want to be in that position. So for me, it's just an absolute no-brainer. It's just like, okay, let me get out of the way. Let me make a more informed decision and come in tomorrow a little clean and watch what the option market's going to do, because Max Payne in the option market going to set a couple levels for us, and we can talk about that. Tomorrow in the pre-market we can go over the Max Payne. Tesla is definitely a trade that I want to go over for everybody, because this is a great way of staying in something, getting up and in a trade. But if you're looking at this, we talked about this today, and I was just laughing, saying it's just, it's the greater fool theory. It keeps trying to figure out how to make the greatest amount of fools out of everybody. Everybody thinks it's got it figured out, and all it keeps doing is just bouncing around. Let's review this for a second. Now, just to walk you through this, I'm a big believer in divergences. So this is the 13th, and what I'm looking for is a divergence. Stocks getting absolutely hammered because they have to do a recall. What people seem to fail to realize about Tesla is most of their recalls, and listen to those words, most, are software updates. So when you see something like this, to me, this was silly, and all I'm looking for out of this is this one simple thing to happen. I'm waiting to see if I can get a positive divergence, and then I'm waiting for a trigger right in here that happened. And once that trigger happened, I just got involved. Now, there's pointing down, and here you are pointing up. That is a positive divergence. You flip right here and you do something that gets my interest, and we put the trade on. You'll see a bunch of other trades in here. I'm not going to cut this out for time's sake, but where I'm going with this is here's the mark, so you can see it, and I'm saying I may be early. Here's the thing about positive divergences. Sometimes they retest, especially the first positive divergence, so that I could be wrong. And all I'm doing here is taking the shot, because I know where my stop is, goes up $1, pull money out, goes up $2, pull money out. And I just let people know, if you want to trim before the Fed announcement, go for it. I didn't. And then up 4, I pull money out. And these are just other trades that we did. But I just want to show you something, and I'll walk through it in a moment here. Tesla stopped out, $21 gain, 100% closed on the day trade. That's the same exact trade, okay? And we were able to stay in it for $21. Now, not everybody's going to do that. Some people are going to sell. Some people are not going to sell. And that's what you have to figure out. You know, that's the thing that other people can't do for you. No one can determine how much risk you're willing to take. Some people would say, I don't want to hold this into the Fed. For us, when the Fed news came out and gave us a demarcation line, it made life easy. Then it popped out, and then we were up so much in it, all you had to do was just the simplest of things. You make a decision, you watch how it's acting, and if you just did the simplest, you know what, if it's going to break this 1 minute or it breaks this low, I'm just going to get out. And so that becomes your stop, and you just watch it play out. And then we knew where the next resistance point was. Actually, I thought it was a little higher. And then when I got to that point where we were up in here, right around in here, I actually just put a trailing stop on it. I'll tell you exactly what I did. I put a 1% trailing stop on it. I'll give 1% back. And then, of course, it's just going to trap you, right? It's going to trigger. And that's what it did. And so we pulled out portions along the way. And then what you're doing is you're just constantly moving the stop up. And no, they don't all work out that way where you're going to buy in here, risk $1 and go up $20. That's where you're pulling money out there. And this is why I tend to leave runners or position trades on. And people say, well, why don't you just take all of it at once? Because every once in a while, you're going to get something that's going to have like a 20-to-1 risk versus return. And it really just gives you that outsized move in your portfolio. So I would suggest that with some of your trades, you consider doing that. Comment below if you want me to get into more detail on how you can determine those trades. It's really not that hard to do. It's like portfolio analysis, and you can do it really quickly. You have 3 trades on, 3 are working. You pick one, and you go from there. And you let that one work, and you scale out of it, but you make sure you're protected, and you see how it goes. You'd be surprised sometimes, especially if you can catch these things. So I would definitely pay attention to that. I'd be remiss if we don't talk about LEN. People are doing exactly what I thought. They're selling it down because they're looking at tonight's earnings and their guidance. Maybe pay attention to the fact that the 10-year yield is absolutely imploding. That might be something that you want to pay attention to. If the 10-year is going to continue to implode, then there's probably no reason to think that demand in the housing market is going to drop. My issue here again is you are so far off on this RSI, and people were like, well, I don't use RSI. And you know, people make me laugh. They're like, well, you know, if it worked as well as gravity, I can just argue that if you're buying things that are at a 90 on the RSI and you're renting them, that's fine. If you're out there trying to build positions in them, I wish you the best, but it's going to be really very hard for those positions to work. They usually signify tops. You might have a couple days of it where you can do really well. And this is really where it falls into when I discuss this with, I say, positive slippage. You want to get out while the getting's good, especially as your accounts get bigger and you start trading size. You don't want to be wrestling with this thing, trying to figure out how the heck you're going to get out of it as it's plummeting. And you know, that was something we did today. There's some really great lessons in here. This is something that we did today in this AVGO trade. We were up like 75% in the options and we pulled money out. And then we were up over, it looks like we were up over 100% in the calls. So you can see here yesterday, we bought them the day before. Yesterday at 9:30, we were up 75% in them. And so you're pulling money out. You got a 70%, pulled 50% out. You have 75% in a day and we're going into the Fed. So it's just prudent to do. And then you're coming in today and the thing's just blowing up. And then while it's blowing up, you're just, okay, I'll sell right into that. Again, you're getting positive slippage. So I was looking out to be in that for weeks, but if you're going to give me 100% in 2 days, it's silly. And herein lies the problem, so that you get it. And so how I get it, or how I view the world. If I get a control bar like that, right, and I break down, I can't get over Matumbo. What are you doing? What are you waiting for? You're waiting for it to get weaker to sell your option? Like, what are you waiting for? Like, how much better is this going to get from going from 900 to 1100 in 3 days? You need that last dollar. So I would just argue that you might want to start thinking about it that way. And no, you're never going to get the high. But the most profitable traders that I know, they're not trying to squeeze the last dollar out of everything. They just look at it and go, where's my risk? And I would argue now that the risk here is that you just come in one day and you're at 1080 and the implied vol just goes away. But we'll see how that plays out and we'll go from there. But I definitely think that no, you're not done. But of course you could come back down, reset, and find another way in. I do think that we should talk about what's going on here with XLRE. I think this is a much longer chart. Thank you for the comments yesterday about that I made you laugh when I said, oh, look, there's a stool, another blessing, because I actually almost laughed so hard when I said it, but I'm like, I'm just going to leave it in. Anyway, and I see what's going on here at the XLRE, and am I going to say, oh, this is different? You're rebalancing based upon macro. Is it different? It's a little different because they're so depressed. That doesn't mean that you're not going to hit a point where you're going to go sideways and eventually work this off, right? We all know that can happen. I don't know that you're going to do this where you're just going to come back down because you don't have the same kind of problems, okay? You have very different problems now. And that's why I'm very focused when I'm buying REITs. The majority of REITs that I want to get involved with are New York-based REITs. I want to be in New York. I want to be in New York office space. And I have my reasoning for that. But that's what's working. We're in this at 23. It's at 3140 SLG. We're in much cheaper than this, but now I have this doji, but it's still trading at a discount to its book value. Well, if rates are going to drop, do you think that maybe you want to buy the stocks that are going to be able to refinance and be able to keep their dividends and they're trading under book value? I mean, maybe that's an area to go. Speaking of that, XBI, I ran this scan. I'm just going to tell you what it was. I ran a scan. There are 200 companies that are in biotech that are trading under cash value and under book value. There are 23 of those companies that are under cash value. Now I have to run it. I haven't ran it in a week. Under cash value, under book value, and 50% ownership by insiders. Do you think that maybe they're going to want a deal? We had 3 deals this week on names, and I think that's really pertinent for us to pay attention to. So for me, where am I going with all this? I would watch and look how the market acts tomorrow. I see signs that we're getting a little frothy, to say the least. So into this, I closed a bunch of stuff, and whether or not I'm getting the top or not getting the top, there are very specific indicators that I look at, and I would suggest that maybe you look at as well, and just see and go, hey, what happened the last time that this happened? And this is the last time that this happened. So I'm going to show you this. See where you're at right now? And it's actually, including today, it's actually gone even higher. The last time that this happened was back here. That was November 2021. Last time this happened was July. Okay, we saw what happened to the market then. Usually you spike and then work it off. You have a macro shift here and you have a massive change in monetary policy. It's possible that's enough to sustain this and keep it moving. But that doesn't mean that we're not cognizant of what happened. And I know that this is a little long-winded for a weekday video. I usually save some of this for the weekend. But I want you guys to get this for tomorrow because I don't think tomorrow is going to be a really easy trading day. You see where you're at with the 200-day? What happens every single time that you start getting up to this level, right? This is July 28th. What happened when you got up here last time? We got Matumboed and we came right back down. Look where the RSI is. So I actually have what I would consider even a negative divergence where the RSI is up even greater than it needs to be, and then we're here. But let's say you don't use that here and you're just looking at this. That gives me pause that I would go, okay, I want to pay attention to that. And as we just kind of go through these, you can see it. Here's the 20-day. If you go mark these off and look at what happens every time you get up here, you have a pullback. And the most glaring one for me, and the one that I use the most, is this S5FI. And when I get to 90, and let me show you from the candlestick position. When I get to 90 and you start seeing reversals, this is probably one of the clearest indications that within a week that you're probably going to start pulling back. And I just want to point out something, right? It's not doom and gloom. That's not where I'm going. I am still very long, but I am scaling into the strength, okay? If I were to look at how this is setting up, and I'm to go and look at how these have played out over the past 18 months, and you've been here, once you started to roll, if you go mark these on a chart, you'll see exactly that these were short-term highs. And every single one of these that happened since 22, and I know it's only 3, every single one of these led to, okay, we crack 18. So if that's going to happen here, then there might be some pain coming up, and I'm not sure if that's what's going to happen, because again, you do have a shift in monetary policy, but I'd be remiss if I wasn't paying attention to it. That's it.